Okay, hi there and welcome to a macro video. This time we're going to take a look at this question: would a housing recession be good for the UK economy? So in this video we'll consider some of the benefits and possible drawbacks of a period of time when average property prices in the UK decline rather than continue to surge higher. And we'll also look at some ways to add in evaluation arguments on any discussion about the macroeconomic impact of a property market downturn. This chart is designed to tell a story that rising house prices are not inevitable. Obviously there was a slump in housing valuations in the aftermath and during the recession of just over a decade ago. Property prices then recovered, although they dipped again in 2011. Actually, since 2016, the annual 12-month percentage change in house prices has been declining, and indeed house prices now are barely rising. Some economists forecasting the risk of a housing recession in 2020. That's what we'll look at in this video. It's important to have a little context about the significance of housing for the wider economy. It's a very important sector. The construction sector alone is worth 7% of GDP. Factor in other industries, other occupations such as architects, surveyors, engineers, decorators, painters, what have you. The construction, the housing industry accounts for a sizable chunk of national output and aggregate demand. And for millions of people, property is the most significant source of their wealth. The housing sector employs hundreds of thousands of people, and there's no doubt that if there's a recession, that would have some widespread downsides, but I would also argue some potential benefits. Here are some key stats on the scale of home ownership. Just under 2/3 of property in the UK is owner-occupied, and of that figure, just over a little over a half is housing where the mortgage has already been paid off. But home ownership has actually declined in recent years, in large part because property has become so unaffordable. Over a third of people now rent their homes, and if we split that 36% down, about 17% of that is private rented, landlord housing, and about 19% is social housing, including, for example, council house properties. So there are some signs of a housing recession. Perhaps 2020 will be the year when house prices across the UK start to fall. House price growth at the moment is at its slowest rate in over 6 years. So here are some of the positive impacts that you might put in an essay on the impact, the effects of a fall in house prices. Some of the potential upsides, if you like, from a downside direction in property prices. Well, first of all, I think a key point is that housing over time will then become more affordable, especially to first-time buyers, people trying to get on the housing ladder for the first time. We talk about generation rent, people who literally cannot afford the deposit on a mortgage. Key workers such as nurses and midwives and teachers and other public sector workers finding it extremely hard to get their foot on any kind of affordable property. And if prices fall, that should improve also the geographical mobility of labour, especially in the southeast of London, where much property is unaffordable. If there's less mortgage debt, if mortgages become a little less onerous, that should increase people's effective disposable incomes because they have less debt to service, so perhaps more money to spend on other goods and services. And a fall in house prices might also bring down some cost-push inflationary pressures in the economy. So when the housing market is strong, the wages of painters and plasterers and bricklayers tend to go up, particularly where there are skill shortages. So a dampening of growth in the housing sector might lead to less wage pressure in that sector. And there's also a kind of value judgment argument here, a normative argument, that a housing recession might get people to think a little bit more realistically about where wealth comes from. It could release resources into perhaps more productive industries in the long term, away from sort of narrow fetish investment in property, thinking that property is a one-way bet. On to a selection of downsides. I picked out 4 for you. One is that household wealth would probably fall in net terms. Some people indeed may have houses worth less than that standing mortgage. We call that negative equity. And if household net wealth goes down, that could trigger a negative wealth effect, leading to a drop in consumer demand, which of course, as you know, is a key part of aggregate demand. So that increases the risk of a recession. A fall in house prices could also lead to a contraction in new house building. The price mechanism at work here, construction companies may be holding back on building new homes and perhaps laying off some workers in construction, and that could cause rising unemployment. And also, if there are fewer transactions taking place, that's less employment and less incomes for people who depend on people buying and selling homes. If fewer new homes are built below the government's long-term target, that will mean that the UK housing stock will continue to age and also deteriorate. And in fact, in the long term, supply shortages might get worse, which of course would then drive prices even higher when the market recovers. And the government also potentially loses out from a loss of tax revenue, in particular stamp duty, which is an indirect tax on house purchases. Some signs already that house building is declining. The fear is that a big drop in prices might work through the price mechanism to lead to a steep decline in the number of new homes being constructed. And then here's a quick article from the FT a few days ago showing the potential fiscal costs for the government, not least £12 billion of stamp duty in 2018. If that fell, that'd be a pretty big hole in the government's own accounts. Putting some evaluation into a potential essay is really important. So here are some evaluation points. Well, the impact of a housing recession depends in part on the scale of home ownership. And indeed, in the long term, the level of home ownership has come down. Perhaps that reduces the impact of price falls on household wealth. A lot depends, of course, on how far prices fall and over what period. And also, is it a national fall or is it a fall in prices isolated in just a few parts of the UK, for example, London, or parts of the eastern regions or the southeast? It's also important to think about how the rental market might be affected by a wider property recession. Would that lead to a fall in the cost of rented property, which would help a lot of people? Building land would likely become cheaper as demand goes down, but people may buy the land and then just leave it undeveloped. Investors holding back from starting new homes until prices start to increase. And think about the wider impact of the housing recession. There might be less retail spending if people are moving homes less frequently. There could be potentially increased problems for banks if there's an increase in mortgage defaults. So those are good evaluation points to think about. And when you're writing an essay, it's always good to try and come to a final reasoned comment. Here are a few examples. One is that, well, I believe that the housing market in the UK tends to make our economic cycle more volatile than in other countries. It tends to amplify the volatility of our business cycle. So if we can have a little less house price inflation, that could help moderate our economic fluctuations. Property is essentially unaffordable for millions of people, and you can make a case for saying that a correction in prices is long overdue. There would be short-term damage to macro objectives in particular, such as unemployment. There would be a loss of jobs in construction and related industries. But a partial return to property price fundamentals, in other words, more realistic pricing of property, I would argue is in the best long-term interests of the UK, especially if there's a big decline in the price of and building of luxury rather than affordable homes. There is a tendency in the UK to go for the luxury end of the market rather than more affordable, accessible properties. That's a supply side issue in the market. So much to cover. Hopefully you've got a little bit of a feel here for how a housing recession, which can happen, might happen, could actually in the long term be good for the UK.